Hello everyone, welcome to another episode of Firm Returns Weekly. This week we've got trading updates from Ecora Resouces and Maritime Investments to go through. And then we've got some other updates on TinyBuild as well. So let's dive straight into it. Show my screen. Okay. So let's start off with the Ecora Resouces. So Ecora Resouces released their Q3 trading update this week. Portfolio contribution was down significantly at $5.8 million versus $14.7 million in Q2, due primarily to low production volumes at Kestrel and Voisey's Bay. The lower production volumes at Kestrel were the result of operations moving outside Ecora's royalty area, as previously guided, and it is expected that operations will move back inside Ecora's royalty area towards the end of Q4, with materially higher volumes in H1 2024. Production at Voisey's Bay was limited to a single delivery due to maintenance at the Long Harbour refinery. They're going to be expected another 3 deliveries scheduled for Q4 in 2023, and a significant ramp up in production volumes expected in 2024 as the mining operations move from above ground to underground, which was supposed to have happened this year, I believe, but it's kind of taken a bit longer than they're anticipating. And now it's the completion of and the full ramping up of the underground operations is expected to occur next year. So we've got this is taken from that trading update. We've got a breakdown of the different elements of the portfolio contribution here. So you can see Voisey's Bay down significantly, and this is not the level it would be at. It was fully ramped up anyway. Yeah, it looks like because they also, you've got to take away the cost of streams, cost of sales for the metal streams here as well. But so this top figure here, the $500,000 or whatever, is not the full picture anyway. But yeah, fully ramped up. Voisey's Bay will be significantly more than this. Obviously, it's also being hit by lower cobalt prices than we had last year. So as what you've got the double whammy of volumes being down and sale prices being down as well. Copper, it's interesting. Mantos Blancos, which is one of well, I suppose it's a little larger, but it certainly wasn't supposed to be making a larger contribution than Voisey's Bay, is actually producing the largest contribution out of the core portfolio. We've got Kestrel down here, runoff, which is down just $1 million for this quarter, and it'd been 9.1 in the last, so it's certainly on quite a bit. So really, with Voisey's Bay ramping up next year, we'd hope that this is going to come up to match. Well, I mean, it won't do 9.1 because that's obviously with Kestrel kind of over-earning quite significantly due to very high coal prices and the change in the royalty scaling that we saw in Australia. But yeah, so I think really when everything is running fully and rates are at resources are at more reasonable levels, the portfolio contribution I think you would expect from the core portfolio would be something like 10 million. So we're probably running at about just below half of what it would be with everything, including Voisey's Bay, fully ramped up. Because I think they said it was something like the average for Kestrel's life has been about 42 million, I think, and they were saying that the core portfolio now, with Voisey's Bay in place and so on, should be able to match that. So 42 million for the whole year. So on a quarterly basis, it'd be about 10 million a quarter. So yeah, I think that's the expectation, that overall, these components of the core portfolio will match that. And then that's obviously before we get all the growth assets coming in, like West Musgrave, Santo Domingo, Viscachitas is the new one they've got and everything, and also POE potentially coming on at some point as well. So all of those will be over and above the 10 million kind of core portfolio contributions. Anyway, yep, it's kind of all in line. We're expecting a bit of a rough quarter, but overall for the year still pretty well. And I think the contributions for this quarter don't actually cover the payments for West Musgrave, which I think were like $9.2 million or something. And there's another final one due in January, maybe. So yeah, those will need to be drawn down on the revolving credit facility, I think. But yeah, hopefully things will ramp up according to schedule next year. And then before too long, we'll start to see some of these growth assets that are added to the portfolio start to come online and get contributions from them as well. Anyway, let's move on to Taylor Maritime Investments. So we also had a trading update from TMI. Net asset value per share on the 30th of September had fallen to $1.31 versus $1.56 on the 30th of June, largely due to the low charter rates seen during the quarter, which pulled down the valuations. These are being independently valued by, I think they take the average of two different brokers, ship brokers, something like that, to get the values. So yeah, it's not the company controlling these or anything. So yeah, obviously the market rates the brokers were seeing for similar sized and age vessels had fallen. But yeah, something to note here though is that since the quarter end, asset values have recovered back to their June levels in line with the recovery in charter rates. Yeah, we can kind of see the charter rates on this graph down here, which I'll get onto in a minute, have come back up. And so that sort of had a similar effect on the fair market values of the vessels. So you can see from the chart below, and this is a chart of market spot rates in the last 12 months versus net average time charter rate for TMI. You can see from the chart below that TMI's chartering strategy has kept rates above market levels for much of the last year, but they're now converging with the index as long-term contracts come to an end, and they've avoided signing new ones at lower rates. Management is anticipating stronger rates in Q4, which the fleet is positioned to capture. So the rates have come up and they have actually sort of flattened a little bit at this level that they're at now. But if you look at the Baltic Handysize Index now, you can see that. So we haven't seen that extra ramping up they're talking about in Q4 yet. But yeah, you can see here from this graph that their chartering strategy of fixing in contracts, so that a mix of short, medium, and long-term ones has helped to smooth it out a little bit and stop it seeing these troughs. They haven't had the rates down at the bottom, which has been sort of around about $6,000 per day, which wouldn't be profitable at all. They've been able to avoid that and just keep rates up a little bit higher by locking in contracts for long duration. But because of the soft rates we've seen this year, they haven't been able to lock in new longer term rates. They have done for some. I think they said something like 29% of the fleet days for the rest of the year locked in for, or maybe the next 12 months or something. Are locked in at here we go, for the rest of 2023. Are locked in at a blended average time charter equivalent rate of $12,200. So yeah, they're locked in just over a quarter of rates of the vessels in a rate that's fairly favorable above the market rate at the moment, which I guess is the charterers, the companies charting out these vessels are anticipating prices to go up, so they're locking in a rate a little bit above the current rate in order to protect against that. So that gives you a guidance of where maybe the market sees rates going from here. But anyway, so the blended time charter rate for the combined TMI and grind rod fleet was circa $10,700 per day at quarter end, and has since risen to $10,900 per day. This is below the equivalent blended break-even of $11,850, including debt interest costs, so they still need to see some improvement in charter rates for the fleet to be positively cash flowing again. They're also working to reduce the break-even value through operational efficiencies afforded by the business combination. No specific target has been given, but management has said anything up to $1,000 per day reduction could be possible. That's across the fleet. So yeah, and they've talked about a few different things, combining insurance, changing the dry docking. Apparently, grind rod was previously dry docking their ships every 2.5 years or something, whereas TMI was doing it every 5 years. So they're now shifting grind rod to doing that, and that saves them a decent chunk of money. Because obviously dry docking is an expensive process and takes the ships out of action for a significant period of time. They're unifying moving all the offices in the different locations they're based in, combining them together, moving the workforce together, which is saving some money on office rent and other things there. Probably some removal of some redundancy in the system there between the multiple teams being combined. That some people, they probably can, sadly for the people, but some of the people are probably no longer necessary. And then I think they were also talking about the other big saving is they don't need a separate senior management team for grind rod anymore. So actually the executive team of TMI has taken over running grind rod as well. So you're only paying one set of executive salaries, which is a pretty big saving, in the millions, for the whole executive team. So that's another saving there. But yeah, there's quite a lot of other things just overall that could, with the combining the technical and commercial managements as well, so all the fleets can be maintained in unison, in the proper sort of scheduling window. Maybe they can probably get better rates as well, but that doesn't really help the break-even cost. But yeah, lots of things they're working on, and they didn't want to say a specific figure, but they said 1,000 might be something they'd shoot for. So we can see whether they are able to do something around that ballpark. So maybe they'll get it below 11,000 as the break even. Right, and anything else to say here? In the meantime, they've made good progress in paying down the debt, with $42 million being repaid during the quarter. TMI's debt balance at quarter end stood at $167.6 million, equating to a debt to gross asset ratio of 26.9%. And as they said if you were to use the values now, with them having gone back up from 131 or whatever it was dollars per share, it would actually be below 25 now, which is what the target they were shooting for previously. as their target by the year end. So I think they are on track to do that. And Grindrod's debt balance is also around a very similar ballpark, including lease liabilities. It stands at $168.9 million. But I think the fleet value for Grindrod is higher. So the fair market value of their fleet is higher. So because they have some larger ships in there still, we can have a look. There you go. Yeah, you can see the Grindrod's fleet value is quite a bit larger still. Just the lighter blue color here. Fair market value of the Grindrod fleet is quite a bit higher than the TMI one. So the debt then on TMI, if you just look at the TMI assets, would be quite a bit higher than 26.9%, but that's just because of the ownership of Grindrod's fleet as well. So yeah, the debt situation isn't quite as significant, I guess, for Grindrod. But yeah, the other thing that's going to be contribute towards lowering that break-even value is paying off the debt, because I think they've £91 million or dollars they've saved this year. You can see from these debt payments they've done. TMI, Grindrod look through, has reduced their interest payments by about $7.7 million a year, which is going to make some significant headway on reducing the equivalent break even. And then further pay down of the debt is also going to contribute towards that as well. I don't know whether if the fleet reduces too much in size, and I'll get onto that in a minute about what sort of size they're maybe they see that they're prepared to take it down to. I don't know whether reducing it too far, you start to lose some of the economies of scale and stuff, and so that would raise up the blended break even again. But yeah, we'll have to wait and see on that one. But yeah, they're moving on to the fleet. Then they have the combined owned fleet. So there's also Grindrod has some vessels that are leases, and then I guess subleases out from there, or charters out from there as well. So the combined owned fleet comprised 42 vessels at quarter end, 21 in TMI's fleet and 21 in Grindrod's. But like I say, Grindrod's is a bit more expensive because they have younger vessels, and I was just going to show you that. They have younger vessels, which you can see. Yeah, here we are. So Grindrod has younger vessels. So you think you can see none of them are less than 2010 in age. Oh, there's one 2007 one there. But yeah, they have some of these ultra ones, the larger ones. And then this also includes the leased vessels here, I think, in this list here. They've got some larger vessels here, and but you can see on TMI's portfolio they've got the vessels are quite a bit older on average. They haven't got many that have got they've got a new build here being added to the Grindrod fleet as well, to actually be delivered in 2024, for instance. So but yeah, the average age, as we'll get on to, is now has been lowered to 10.5 years versus 13 if you just look to the TMI fleet. And the average carrying capacity has been raised to 40,000 deadweight tons, which versus 33,000 deadweight tons with TMI's fleet pre the Grindrod acquisition. So yeah, it's had some real benefits for the company overall. But yeah, they're looking to they want at the moment, obviously the operations are not generating, and the current charter rates are not generating cash flows to cover the debt interest and so on. So they don't really have any other choice other than to sell down or sell off the assets, which they've been able to do at around about NAV. I think like the average has been 3.3% below NAV or something. So really not not having to sell them at any major discounts or anything at the moment. So really capturing the value that you can see in that NAV per share figure. So they're continuing. I think this year they've sold 14 vessels this year, and I think they're looking, or this year, or maybe since the Grindrod acquisition, let's say this year, and they're looking to, they could potentially sell down as low as down to 30 vessels, so another 12 vessels from here, potentially, if they deem it necessary. Obviously, if rates do pick up, then and they start getting, the operational leverage swings them into being very positively cash flowing again, and profits ramp up. It makes sense to have as much tonnage as possible, as much capacity in the fleet as possible, because you can then capture all those higher rates. If you've sold off your ships, then you're not able to capture that, but as much of that. So yeah, they obviously want to define a balance. So I think I could see a fairly steady cadence of sales through the year. Effectively, if rates stay around where they are now, it will just be a case of paying off the debt as it comes to. And also something else they mentioned was that the Grindrod debt, so TMI's debt's all been refinanced with a revolving credit facility, which means they don't have to actually make principal payments. The idea is the facility just revolves when maybe at a higher rate if interest rates change, but it sort of just revolves every 2 years or 3 years or whatever they have the facility length set to. But with Grindrod, quite a lot of it is debt that has specific principal payments included. So that then means they have a burden of not just paying the interest, they also actually have to pay down the balance as well. So they're looking to potentially get this converted, refinanced to the RCF like they did with TMI's debt. So it's a very similar level. So it looks like, I would think, and with a potentially higher quality fleet as well. So there's potential for them to do that. So yeah, we'll have to wait and see on that one. That would obviously take a bit of the pressure off them. They wouldn't be forced to pay down debt then. They just need to have enough cash to cover the debt interest and so on. But yeah, we'll have to see how they go with something's down. The share price at the moment is very significantly below the net asset value of the fleet, so there's still a very decent margin of safety in there, and we will hopefully see these charter rates go up a bit and tip it back into being cash positive, because I don't think it's not just going to be TMI that's in the same situation with this in terms of their break-even costs. There'll be a very similar scenario across many other peers, which means that rates have to go higher really in order for it to be attractive for people to actually think. Otherwise, people are just going to start decommissioning older vessels. What's the point of paying the maintenance anymore when there's quite a lot of vessels already? I think there's quite a good number. They give a number on this as well. Yeah, there's 9.5% of the handy-size fleet is over 25 years old anyway, and I think the average age normally for decommissioning is something like retiring these vessels is like 28 years. So they might just, all these ones that are over 25, if they're not making a profit on them anymore, they might just start retiring them early, which then obviously quite quickly will shrink the balance, shift the balance of supply and demand. So we should naturally push the rates up. So there's definitely going to be some impetus for rates to rise. The company just has to get through this period, which they are doing by reducing their debt and so on with the vessel sales, which they're still able to do at reasonably attractive prices currently. Right. Okay, so And yeah, I put links in here for the Ecora Resources. This link takes you to their the trading update on the London Stock Exchange there. Another one for the TMI trading update. And there's also a link to this investor presentation, which is very good. I actually saw the live investor call where they presented this as well, which is good, but you have to contact their investor relations to get that. But if you want to just look at this presentation, which had pretty much all the same information, had all the break-even stuff that I was talking about and stuff like that, then you can get this just through their website and the link that I've given here. So yeah, very good. And I think I've pretty much given all the extra context that management gave that was worth hearing anyway. So yeah, let's move on to TinyBuild. So we had the release of Stray Souls this week on Wednesday, on the 25th of October. And things were looking reasonably promising prior to the release. I didn't think it was going to be the top performing. This was a versus evil title. I didn't think it didn't look like it was going to be as their top performing release for the year. That would probably, it's going to be Broken Roads, but it was looking pretty positive. That was going to be retailing at a pretty high price point of $29.99, kind of like what you call maybe a AA game, starting to get into the more premium price point there. And it had its wishlist ranking on Steam was 358th place, which is not too bad. Again, not as good as Broken Roads, which is 137, but yeah, it didn't look like it would be too bad, and the higher price would probably help to offset that a little bit. It was also simultaneously releasing on Xbox and PlayStation, and had, I mean, I think the original trailer when they were talking, they advertised this game on YouTube had like 1.3 million views or something. So there was quite a lot of anticipation for it. And this was then kind of reflected when you looked at on the day of release, we had the game immediately, well, they released it with a 20% discount on Steam to drive sales, I guess. And this would just be for a few days or whatever anyway, but no, the first week of release. But so yeah, it released, it was on the top of the new and trending list, so just largely because it was new, but it obviously had a decent number of wish lists, which got it put on this list here for people that were interested in. And then they had a live stream on release as well that got, I think it was a bit higher than this when I at another time, but I only captured it was 1,469 viewers, but I think it was above 1,500. So quite a good sort of bit of attention that the game got. So there were some early sales, and it got it into, I think it was 210th place, I think was in the top selling games. This was what I saw. It might have gone higher or whatever, but for a time it was in the top 250 sort of selling games. So yeah, quite a good thing. But I'm trying to soften the blow a little bit, but unfortunately that's where the good news ends, because the game has thus far had a 27.12% positive review score. So only 27.12% of people would that reviewed the game, and there was about 100, close to 120, 118 reviews, and yeah, only 27.12% of those were positive. So yeah, not good, and in fact absolutely terrible. I don't think I've ever seen such a abysmal reception. Even Firewall Pioneers, which I've complained about in the past, was mixed. It was like 56% or something like that positive. So it was still sort of middling. It had issues and so on, but people still enjoyed the game and like the console. This one, Most of the reviews were people. The game was not long either. I think it can be completed in 6 or 7 hours or something. And most of the reviews were people that actually played the complete game, completed it. So not just like giving it 5 minutes and then leaving a review. They'd put in enough time to play through it, and they were not kind. I recommend going and having a look at reading some of those reviews. There was an awful lot of them had the word garbage in them. Put it that way. So very unfortunate, really. And you can also see this reflected in as soon as the game gets a really like mostly negative review score, it's pretty much dead. It's going to be very difficult to drive people to buy it after that once they see that score. But yeah, early on, people were just buying it because they couldn't. There was no review score to go on. It was on their wish list. They buy it. They try it out. That's how the wish lists are important. It gives you that initial traffic of people coming in who then, if they enjoy it and they positively review it, then draw more people in or other people on the wish list will wanted to wait to see what the reviews were like and so on. So but yeah, so it kind of got that bit right. But yeah, the game was not good by the sounds of it at all. Yeah, and the peak it's actually had since release was just 170, which is not a good number at all. Peak concurrent players, which looks like it could be for the entire game's life, 170. And just a couple of days later, it's not even managing to do. I don't even think it will achieve like 40 today. I think it's at the peak for the last 24 hours was 43 at the time of writing. So yeah, really not good. And we don't know how it's done on consoles, but and again, there'll probably be some initial sales, but just because people were had high hopes for it and so on, maybe people that were certainly an audience of people that are interested. But yeah, I can't imagine people, anybody that's waited to read a review or anything is not going to be buying this game. So yeah, those sales that they've made initially are going to soon die off. So when you think about all those costs, so they released, it's a game that's going to cost $30 basically. So they obviously had a fairly decent chunk of money spent on it, and you can see from the screenshots and things like that graphically and so on, quite a lot of work's been put into it and so on. So I don't want to think about how much money has probably been wasted on it. But yeah, it's all of that's going to be amortized. So yeah, and I very much doubt the revenue from the game is going to get even close to covering the amortization that has been set against it. So yeah, it's going to be very negative for profits for the second half of the year. But what else to say? Yeah, I don't think sales are going to be great on consoles either. So, yeah, but and the costs as well. I'm also think if they spent all the money before actually, if they put it out early access or something, and they could have held off on porting it or putting in all the money to port it until they'd seen the game was well received or something. That's a way of something that Tiny Bull's done quite a lot with a lot of their games. Quite often, the early access releases 6 months or more before the wider console release, and that helps to reduce the risk of the money being spent on it just being wasted. But in this case, all that money's been spent already because it's already been ported to the other consoles on release. So yeah, bit of a shambles. A complete, just basically money being lit on fire from what I can see here. And yeah, I've said here that the failure of this title means we could be looking at just one major release for Versus Evil this year, assuming that Broken Roads is a success. And I say this year, but that could be since they actually were acquired by Tiny Build, because I look back and I can't really see anything major that would have really moved the needle. There weren't any really. There were games that got positive reviews and so on, but nothing that's not really anything that's made any big big numbers at all. In the, there's not been anything of even the level of like Iron Future or Punch Club 2 or anything like that. There's not been anything of that kind of level released by Versus Evil in the last couple of years that I can see. So yeah, it's and crucially here as well that I think I've said here that something has got to change here, as I can't imagine a single third-party release. So again, this is a third-party release. All the games that Versus Evil published are third-party, but Broken Roads, which is going to potentially be their biggest hit for the release for the year, is a third-party as well. So the profit margins are going to be minimal on that. They'll make back the money potentially that they invested in it, and then from that point onwards, it'll just probably be 30% margins or something. So yeah, really not great, and it's not going to be enough really to cover, I would imagine, the expenses of a 50-strong publishing team, which is the headcount over at Versus Evil. So yeah, I don't have I wouldn't want to be working in that team right now, put it that way. Things aren't looking great for their future, unless something drastic can be done to turn this around. But I think that would require pretty heavy-handed management from Tiny Build, which is not what they've been doing up until now. It's been very arm's length with Versus Evil, leaving them to it, trying to give them autonomy and run a sort of decentralized kind of model. But that doesn't seem to have been working very well. So they either need to grip become a bit more heavy-handed with the management, take a bit more direct control of how that publishing studio is managed, which is going to take time. It could take another year or more to really start getting other high potential titles and hopefully even own IP stuff on board. So that could take quite a lot of time and money to get to that point. Or I guess there are other options, but we'll have to see how it plays out. But yeah, I don't think things can continue as they are right now. Certainly not sustainable with these kind of shocking releases like Stray Souls. Anyway, moving on to more positive news. The Halloween update for Secret Neighbor has now been released. I think this was released on the 26th. 26th, 27th. And it's so far generated a significant boost in engagement. There's like another couple of characters, some new maps, various other things. I've not actually played Secret Neighbors, so I'm not really an authority on it. But from the trailers and so on I've seen, looks to be some decent new content added, and it's thus far been fairly well received from the look of it. We've seen a nice spike in engagement from the concurrent player numbers since release, and yeah, so it's good to see. The continuing engagement in a game like this, and I think again PCs, but perhaps not the biggest platform for this game, so the console figures might be the sort of background sort of player count console figures might be higher anyway. And then we've got a couple of consoles, and then they've also got mobile versions and so on and certainly iOS, I think, but possibly Android as well. But I'm not sure whether they're going straight for those, whether this new update goes straight to those. It might be a bit more delayed. But more broadly across the whole Hello Neighbor franchise, they've been all the titles have been included in various Halloween sales that are occurring on different platforms. So Steam has one, which you can see from the image here. With Secret Neighbor and Hello Neighbor getting 80% discounts, and Search and Rescue, I think, as well. And then you've got Hello Neighbor 2 getting a 50% discount. But yeah, and there's also sales going on I think Xbox and PlayStation as well, so across the board. So yeah, that's good to see. Driving a few more sales for these games. And then I've just actually watched, shortly before I published this article, this newsletter, put it out earlier today, and I've just got back from actually finished watching this, which had its premiere, I think back at quarter. Well, it was quite good actually. They basically had a process they played through the entire season, which is about an hour. All the episodes added together, 1 through 5 added together is about an hour. And it was good to actually say there was quite a bit. I'd watched them before, but they're spread out by weeks or whatever in between them. I hadn't picked up all the details, and it flowed really nicely actually, them all being connected together, one episode after the other. It was quite a smooth sort of transition through. Yeah, I think it was better to watch it all in one go than separated apart. And maybe that means we need recaps or something before each episode to help with that, because they were sort of, I remember coming into, I think it was the 4th or 5th episode or something, and it probably the 4th, it being feeling a bit disjointed, like, oh, what are we doing here? I'd forgotten why they started telling stories about them following the Mr. Peterson, the neighbor, around town and so on. I was thinking, why are they telling these stories? But then at the end of the last episode, they just said they'd agreed to all go and follow him. Well, I'd completely forgotten that detail because it was a week later. So probably some kind of like recap, like clips video or something would have been good. But anyway, that was what made it a more coherent thing for me, watching it all in one go there today. And yeah, they actually got really, really dark. I will say, I kind of hadn't quite realized, because I haven't actually played the Hello Neighbor games. I hadn't quite realized, and I'm not sure how dark the actual games are. I don't get the impression, certainly the first one wasn't quite this dark, but yeah, there's like some seriously dark stuff going on. And like one of the characters has been in this episode had been locked in the basement. The kid has been locked in the basement and is now wearing like it's like completely shell shocked, and yeah, and people are actually dying and all sorts of stuff. So yeah, it's and there seems to be some occult stuff going on, which is getting really interesting. So yeah, I've actually been really engaged with the series, and it's certainly, I'm not sure about Hello Neighbor, whether I've been drawn to play that game from because I think that's quite a little different. But with the updates, which we'll get on to talk about in a second, that were previewed in this episode at the end and so on, for Hello Neighbor 2, that's looking really quite interesting as a game I might actually want to play. So yeah, I think the series is serving its purpose of drawing people into the world. And they also advertise a lot of other Tiny Build games in there. There's Totally Reliable Tools or something like that for the Totally Reliable franchise. I don't think any Kill It With Fire stuff, but maybe I just missed it. There was Happy's Humble Burgers have been served at lunchtime in the canteen of the school, which is the Happy's Humble Burger Farm is another thing. And then there's probably some other ones I'm missing in there as well. But yeah, it's kind of good they've been able to advertise some of the other franchises that Tiny Build owns and so on. So yeah, quite interesting the way they've done it, and I actually say it just an enjoyable, entertaining series to actually watch. Especially, I probably recommend just doing the full thing in an hour and I don't know 15 minutes. I think the last episode was 15-20 minutes, so an hour and 20 minutes you can watch the full series, first season through, and it was yeah, really really quite interesting, and it's got quite compelling. I think I think you can see a little bit of an Easter egg here. 11.9 HN3. Guessing they secretly drop in a, a date next year, maybe for Hello Neighbor 3, or maybe there's going to be an announcement this year on the 9th of November for next year. Who knows? Yeah, I guess maybe that would make more sense than knowing exactly the date you plan to release it next year. Towards the end of the year next year. It's hard to know exactly what else is coming out, I guess. So that might move, but you could have an announcement on the 9th of November, so maybe look out for that. But yeah, so it's been quite good. And I think the Hello Neighbor 2 update they're doing really does look like a complete game changer from what I've seen of the trailer and some of the gameplay of the current game that's out there, Hello Neighbor 2, versus the clips they're showing and the original demo they did for the game and so on, which and alphas and things like that people were really enthused with. Those look very different to what currently you can see in the game. So yeah, it could really be a massive game changer we're about to witness. And on that subject, we did actually get the release date for that game, and we knew it was going to be coming in the next few days because it was supposed to be the Halloween release, but that is actually getting released on the 31st, so on Halloween as well. So yeah, we'll have to watch closely the reception of that game, that update, see what it's done, see if it's really driven up engagement of Hello Neighbor 2. Hopefully so. If they're looking to do Hello Neighbor 3, want to pull Hello, because I think if I looked at the figures, Hello Neighbor, the original Hello Neighbor game, still has has a higher concurrent player counts and engagement than Hello Neighbor 2 at the moment. So even though that's the much older game, so yeah, we need to drive this. But as Alex has said in the past, that was the case for Hello Neighbor. Initially, it didn't do well in its initial release, and then recovered a year or so later when they re-released it, improved it and what have you. So yeah, and I think, and I've talked before about Hello Neighbor 2 and the talk that Alex, the CEO, gave on that one, on like a post-mortem of why that the game didn't end up being. It largely came down to the game not being what the fans thought they were expecting. Like I say, there was an awful lot of excitement about the demo that was released, but then the actual game wasn't anything like the demo. So it looks like they're moving back to what was vision with the demo, and I really like where the animated series is going with the seriously like a cult stuff, and Mr. Peterson not being the only alone actor is I can say that, but I probably already spoiled too much of the series there. But yeah, give it a watch. It's actually a really interesting story. So worth your time, and I think it will spark some interest in the overall franchise. Yeah, and then another thing to look out for next week is we've got Slime 3K releasing on the 2nd of November. So yeah, that one is one that the demo is pretty well received. I think it's now certainly in the top 600 on the wish list. It's not going to be a massive game in terms of like it's not as highly wish list, for instance, as Stray Souls was, but it seems to, I think it could still do well. I think it looks like it people are interested in it. I think the demo did well in terms of, I'm pretty sure the demo for Slime 3K got more players than Stray Souls did on launch, for instance. So yeah, could be quite promising. And I think people might not wish this it maybe, but it's still it's still attached to Despo's game, which has quite a big following. So yeah, the people that are interested in that one, whatever. But yeah, we'll have to see how that one does. But I think it will pay for itself. Certainly, I think it will be a success. But it is a much more smaller game anyway. So Not sure what it will retail for, but I don't think it's not going to be anywhere near the $30 or whatever that Straight Souls was going for. But anyway, I think we'll have a few more things to talk about next week with Slime 3K, Hello Neighbor 2 update, and so on. Yeah, so I'll get back in touch next week. This is just for readers of the newsletter, letting them know that I do the YouTube video as well. But you guys already know that because you're watching the video. Anyway, I'll see everyone next week. I recommend giving the animated series a go. It's like I say, I haven't played any of the games. I'm not a major fan of this particular franchise because I haven't played it. But I still enjoyed the animated series in its own right. So they've done a really good job with it. I think stands alone very well, which I think was what they were aiming for, and it has sparked my interest in some of the games, particularly Hello Neighbor 2. Anyway, I'll leave it there, and I'll see everyone next week.